Welcome to the Quant Room, the stories behind the data.
Y'all know what it is, Quant Room, getting the stories behind the data, powered by Spikeet. Today we have I think today's episode is going to be very good. We have someone that many of you guys don't know. He's not on Twitter. You can probably find him in a couple of your local Discords. His name's Colton. He's a systematic trader. We came from similar camps, and really today what I want to do for the Quant Room series is I want to get someone in the middle of their journey. So we're talking about someone who's seen success, but maybe they're not rich. Maybe they're not, a Chris Shunks yet, but they're on the process of getting there. And we want to talk about, the struggles, the learning, the pathway, the thinking, the mentality while you're literally in the middle of it, not while you already made millions of dollars, but while you're trying to get that initial 100K profit, while you're trying to really get there. So I think for people like me and maybe other people in the systematic that's seen some type of success, has been doing it for years, haven't really had like a really, really, really strong breakthrough, but making small breakthroughs step by step. I think this is going to be a good episode for you. So, with no further ado, we have Coach in here. He goes by, I think your name changed a couple of times, but I think in Discord you go by Bolton Boy for guys who don't know. So, yeah, man, how are you doing today?
I'm good. How are you? Thanks for having me.
I'm doing pretty good. I took one trade today, which is nice because I haven't been trading because I've been so busy. And my one trade today was on WVE, small cap, took it long and made some decent money. So yeah, it's like the first trade I won in months. So I feel great.
Oh, nice.
How about you? How's
Love to see
everything
that.
going?
It's good. I didn't trade today, but that same ticker we were talking earlier that it was on my scanner.
Yeah.
Kind of the one to watch. But I'm looking more on the short side, so obviously it was super strong. So
Okay.
didn't hit my signal. So kind of just, we can go through my day-to-day later, but yeah, just worked on some back tests and worked on some research today instead,
Okay.
since there was no trades. So
Yeah, nice. That's how it is some days, no signals. So I guess to start off, I've been talking to a decent amount of people in this field, systematic field as of late. A lot of them consider themselves like hybrid, which I guess displaying hybrid is more like I do a lot of systematic stuff, but there's some discretion to it. Or maybe I have a systematic system, but I'm also doing discretionary trading. Or maybe I have a fully systematic system, but I interfere with it for, my own personal reasons, maybe like news or something. What would you describe yourself as?
I would say right now I'm trying to transition to full systematic. I think as somebody who's interested in systematic or learning a systematic strategy, adding discretion too early on, I think is a little bit dangerous. Just because I think at the beginning you kind of just want to have your systems really nailed in and the signals are really clear and the exits are really clear. And then once you get comfortable with the systems, then I think that's when you can add discretion, and that could, adding discretion can be a huge way to increase profitability and help success to your system.
Mm-hmm.
Just a few simple things by just, for instance, if you just let's say you have a profit taker somewhere and, the stock almost gets your profit taker, but your system says, no, don't take profits. Even something as small as just, taking a little bit off when it's like 1% from your top profit taker, could be a huge help as far as adding discretion. But I think as far as right now, I'm just trying, since I'm developing a bunch of strategies, I can't be messing up the signals by adding too much discretion early on, because then I don't know, is my system working? Or am I just, doing random stuff that's, I don't know if it's helping or making it worse.
Yeah. So, you're transitioning then pretty much from almost like what would you call it yourself before this, hybrid or more discretionary?
I would say more discretionary. So I have had an algorithm that's been running for about a year, over a year,
Nice.
and that has been completely systematic, but that's more of like an EP strategy.
Hmm.
So I was trading small caps in a discretionary way for the past year or so, and I'm trying to transition to only trading small caps in a systematic way.
Okay. So for the small caps, was it short? Was it long? Like, what did that look like exactly?
So right now I have two strategies that I've tested, both on the short side. I think I struggled a lot to figure out a long strategy, and I kind of had a breakthrough like a few months ago as far as just finding those short strategies because I kind of got lost in the weeds um, as far as looking for long edges. I think they're very difficult to find,
Hmm.
and this has kind of been mirrored by big small cap systematic traders that I've followed. Most of them have said that they have not found a long edge without discretion for longs.
Hmm.
And there's a lot of reasons for that. Um, but I think the main reason is that the edge skews so heavily short for small caps because, at the end of the day, almost all of them end up fading.
Yep.
It depends. It depends how much they go up first, obviously, but the edge just skews so much on the short side. So it's very hard to figure out a long edge.
Yeah. Yep.
So, yeah. So as somebody starting out, I just wanted to, I don't need to reinvent the wheel. I just need to find those few edges and then, start trading them. And then, down the line, I can add a long strategy and that has some discretion involved.
Yeah. I think that's a good approach. I'm taking a similar approach. I actually been kind of, I guess, more interested in looking short for things again because the people I've talked to have kind of pointed out the struggles of going long, and just a systematic approach. I think if so many people have found something there, I think I should probably relook into it. Sounds like you have a similar mentality where you're not trying to reinvent the wheel. So tell me, how long did you trade discretionary?
Yeah. So I could kind of go through my journey a little bit. Um, I started getting into or become interested in trading during around COVID times just because, not much to do.
Hmm.
That happens a lot to a lot of people who got their start.
Yeah.
So I started reading some books and kind of was doing some random strategies. I was selling the wheel, if you are familiar with that.
No, I'm not.
Um,
What is that like?
it's like selling put options and selling
Oh,
volatility.
okay. Yeah,
Yeah.
yeah, yeah, yeah. That's how I got
Collecting
started too.
premium. Yeah, exactly. So, that's kind of floating around on the internet. You try some of these strategies that don't really work. And then I think I found KQ
Hmm.
in around 2021. So I started studying him and maybe trading a little bit towards the end of 2021. That was kind of when I first started trading and realized, what developing a discretionary system looks like.
Hmm.
And then I traded that for 2022 and 2023. Um, it was kind of just flat, it wasn't a good market.
Yeah, 2022
Had
was
some
tough.
success, yeah, but it was bear market in 2022, and trading flags and stuff wasn't very good. Besides oil names, so after that, I think it was like 2023, 2024. I got interested in EPs just because um, they were less market dependent and you could kind of approach them in a more systematic way. So that's kind of when I got interested in that. Um, and then I started doing studies on my own and, really bad studies, like very biased, like bad data, just, hand collected, but, you don't really know better
Yeah,
at that point.
yeah.
So,
Can we stop there
um,
for a second? I want to talk about
sure.
that. I think that's a very good Like that's a very important learning lesson in the journey, is to figure out the stuff you don't know. Um, I had the exact same thing, so I would love to hear more about like the bad studies. How were you doing the studies? How long they were taking? Just in general, just give me the rundown of that. I feel like that's a big part of the journey.
Yeah, I think the first study I did, this was a long time ago, but I know I was just collecting data points by hand, you know, in probably Thinkorswim, um, screenshotting the charts,
Mm-hmm.
recording. I think I manually recorded all the opening range high levels, manually recorded their gain, 5 day gain, 10-day gain. I mean, this took me months to do like 30 samples or like 50 samples. I don't even know.
Yeah.
But, it wasn't even good data because I was, I wasn't screening the sample set correctly. I was just kind of picking. Um,
Yeah, with your human bias. Yep.
yeah, exactly. Picking with my human mind at the beginning of market. So, it was kind of like forward testing. So I would, scan, have like some scan and then pick some of the stocks that gapped a certain amount and then record that data and kind of go through that. Obviously, that's hugely flawed and extremely slow, but I enjoyed doing it. I mean, it was really interesting, and that was kind of my first, you know, study, I guess.
Mm-hmm.
Um, and then, yeah, from there, we can talk about what I did from there, but that was kind of the first thing that I did.
Yeah. So first study was hand bias a little bit,
Yeah.
kind of choosing the samples, and then what was the results? Like, did that make you did that improve like your trading, results or anything?
I think it did. I think every study I did get something from it.
Okay.
So honestly, I think if you just do those studies, even if they're wrong, sometimes doing those studies can just help your conviction
Mm-hmm.
and just really laser focus what you're doing in the market. It could probably improve what you're doing, even if it's giving you wrong signals,
Mm-hmm.
because you'll probably immediately cut out, if you're following what your study did, you're probably cutting out a bunch of random trades that you're taking and you're kind of honing in on a certain data set.
Mm-hmm.
So it could help. I think it probably did help me.
I feel like when I did it, it helped me a lot.
Yeah.
Especially, I think the first time I really did the studies was somewhere around 2021. I think it was in June, and I had like a series about it, and I was streaming it on Twitch. In 2022, actually ended up being my first profitable year after I did like my first, literally exactly what you did. I wish I can share it now, but yeah, like I took the manual charts, I took pictures of them, I took the opening range high, I took the risk reward for like the breakouts and how, what the RR usually is for,
Yeah.
a good
Yeah.
breakout. It was
Exactly.
biased as hell, everything. I was
Yeah.
putting together quizzes for myself and everything. So, but yeah, it was interesting. I definitely feel like it honed me in on a certain skill set to speak to what you're saying. So, uh, so I guess so you did that for, a while. How long was that? I mean, it's 2025. You said you started in 2021. So how long was that, I guess, that process where you was like, okay, well, uh let me change the way I'm studying. Let me change the way I view the market. How did that happen?
Yeah. I think I really started in like 2022 as far as like really showing up to the market every day and like trying to trade. Um, so that was 2022. I was trading breakouts.
Mm-hmm.
2023, I decided I wanted to focus on something that was less market dependent, so EPs. So 2023, I was kind of doing these random studies,
Mm-hmm.
um, and then maybe the end of 2022 also, I guess, because I think I started figuring out how to actually get data and do an unbiased study probably towards the end of 2022, 2023 study. 2022 was kind of just like, I'm not sure what's going on.
Yeah.
Yeah.
Yeah. And I think that's really a hard lesson. I think a lot of people still study wrong. I think,
Yeah.
I have a whole group, and I mean, we evaluate our studies all the time. We evaluate other people's studies to see what can we learn from them. It's definitely a science that is learned, and you probably won't do it right the first time. I mean, everyone talks about overfitting, curve fitting, having too many complex signals that you can't even take to the market. So
Yeah.
I guess what to you, and you're like you said, you're in the middle of your journey. So what to you is like a non-biased study? What does that look like exactly?
To me, a non-biased study is being able to write down the criteria that you have, um, and be able to run a historical scan based on that criteria and have it populate automatically based on whatever it is. And then from there, you go to entry methods, exit methods, filters for execution.
Mm-hmm.
But the key is to get that scan that's not, based on some data that you collected manually by hand, right? So you're able to, however you do it, get that unbiased scan. So you have good, reliable data to base your study off of.
Yeah, exactly. And that's super important. And I mean, when you're trying to do a systematic system, if you build it on crappy data, I'm not going to say your results is not going to work, or it's going to be less accurate though, if that's the case. I mean, if you find a good edge, regardless if the data is good or bad, it'll probably be a good edge, right? I mean, that's how it works. But you'll probably see a lot more inconsistencies if you don't have the proper data. So with going about that, this is one of my biggest struggles was, and it's still one of my biggest struggles today, right? At least if I'm not using Spikeet, right? How do you get, this data per se? Like, how do you get this unbiased data? How do you form these data sets? Like, how are you, what is the process that you went through to get it? Like the whole, from start to finish, like where are you at now and what did you start with in the beginning?
Yeah, I think what did I start with in the beginning was I was focused on earnings. So I would want to test, post earnings announcement drift.
Mm-hmm.
So I think at the beginning, I was only manually forward testing or collecting data through forward testing. Like I would take all the earnings that were announced today and add them to a list,
Mm-hmm.
and then I would have them as data for later.
Mm-hmm.
But then, the data set is, I only had a year's worth of data after collecting for a year, which is not enough. So I think after that, I used an API with earnings data,
Mm-hmm.
and then I grabbed, earnings dates from 10, 20 years back. So that was like thousands and tens of thousands of, dates. So that first system that I developed was based on that data. So I was able to take that data and then this first algorithm that I developed was with a few other people. So we kind of developed that together and used that data. So that was kind of the first real system that I put together.
Okay. So you did it as a group, or did you just kind of take what you learned and had like people build it out kind of?
It was collaborative, yeah.
Okay.
So I met somebody on Discord who um, made his own trading platform,
Oh,
and in
wow.
that trading platform, you could also, do some scans, historical scans, and you could import, for instance, all the earnings data, and then you could write, buy at a certain time when it's up a certain time, and then, look at a back test based on that.
Yeah.
So that one was a collaborative.
Okay. So they had kind of like a platform that you can trade, but you can also do scans, like get historical data sets for certain things
Exactly.
and
Yeah.
also do like back testing. Okay.
Exactly.
A very
Yeah.
useful tool.
Extremely useful. Yeah.
Yeah. Where do you think you'll be if you didn't get access to that?
Well, I think I would have been a lot slower. So we can talk, I will talk about later, like where I am now. So I've kind of built out a workflow
Uh-huh.
that I'm self-sufficient with. So,
Oh, okay. So now you have like your
yeah,
okay, gotcha.
yeah,
Okay,
yeah,
nice, nice. So we talked about some of your systems you're kind of shorting. You have a I guess an EP strategy. Can you tell the people, I mean, everyone's not from the same camp. I think most people know what an EP is, but can you just explain
yeah.
what that is real quick?
Yeah, an EP is a stock that has news or earnings, in my case, earnings, and they announce it. And basically, the idea is that announcement creates a market imbalance where there's more buyers and it goes up for days after the announcement.
Mm-hmm.
So, my strategy was based more on technicals, but some people that trade them with discretion, look at the earnings numbers, look at the revenues and stuff like that. Um, but yeah, that's what an EP is. But there can be news related EPs. Biotechs have a lot of news related EPs with FDA approval and stuff
Mm-hmm.
like that, new drugs coming out.
Mm-hmm.
But I think as far as systematizing something, um, it's easier to look at one thing. Like it's hard to interpret just news that's not earnings because it could be literally anything. So you could come up with a strategy that's, for anything that gaps up on news, but um, it's a little bit harder to systematize.
Yeah, I would say so. So, so you got that, and then you have, I guess, the two shorts, and so basically, it sounds like the main focus of your study so far has been gappers, and that seems to be a consistent kind of, I guess, theme with the systematic people. Have you ever looked at anything outside of gappers?
I mean, I've looked at a ton of stuff, um, but I think people gravitate towards that because it's such an easy,
Yeah,
data point.
yeah,
Something gaps up X amount, it's going to do X, Y, Z, right?
yeah.
Once you start introducing, chart patterns, candlesticks, movement doing certain, up and down, then, how do you systematize that? It becomes much more difficult.
Yeah, agreed. The I think the easiest signal to put into a metric is a gap percent, right? And I think that's why a lot of people focus on it. It's like the first real signal that you get, and there's going to be consistency with it. There's you got obviously gap ups and gaps down that people look at, but you can look at either one of those and automatically input it into a system. X stock gaps up X percent, give me the high, the open, blah blah blah. While
Exactly. Yeah.
something like a breakout percent could be very discretionary to look at, right? Um,
Yeah.
so it's a lot
I
harder.
think another aspect of that is also you're immediately focused on the stocks that are in play that day. If the stock is gapping up on volume, then you know that people are watching that stock and there's going to be movement on it, you know, because if the stock isn't gapping up, it could, it may break a certain level or go below a certain level, but you could be trading it on, you could be trading noise, you
Yeah,
know, random movement. So that gap, like we said, just gives that clear signal.
yeah. One of the best signals. I mean, at least from my studies, one of the best signals, along with stuff like volume. Have you ever looked at anything else? I mean, you said you looked at a lot of stuff. Have you looked at like all time high breaks or like all time, I guess, volume days and stuff like that? These are some of the other signals that I've personally looked into.
Yes, I've looked at the all-time highs,
Mm-hmm.
um, and I think that's a great sign. I haven't looked at largest volume day on one stock.
Yeah.
That sounds pretty interesting, actually.
Yeah. I mean, it was something that someone did a video on it. They claimed it had a positive skew. I don't remember exactly all the details, but they had like some type of system, some type of algo around it. when I was doing like research. So it was interesting. I'm always trying to, I guess like for my general group, I don't code. So, I mean, I can, but I don't code. I might review the code to make sure it makes sense, for actual trading purposes. Like, can we actually take this live? Cause I'm the most active trader in my group. But I guess my general role for my group is, like a strategy gatherer, right? I formulate ideals and I try to output them to the group, and then they get tested. What about like you and your group? What's your, I guess, dynamic?
Um, as far as the group, um, there hasn't been that much progress just because everybody's kind of at different stages and
Mm-hmm.
their trading and different priorities right now. So that's kind of why I built out my own system as far as like how to backtest, on my own, um, so I could develop these new strategies. So the only strategy that I developed with them was the EP strategy,
Mm-hmm.
and we're actually, working on some other stuff, mostly around gappers.
Mm-hmm.
But now that I can put together code and stuff, I can help write the backtests and stuff like that. Um, so yeah, it used to be I was kind of more like the strategy, or not all, it was a collaborative, but I wasn't able to write code back then. So, the other people in my group were, he wrote the program, so he was able to write the code for the backtest and stuff like that,
Mm-hmm.
whereas I wasn't. So I'm able to at least, contribute more in that sense.
Okay, nice. That's always helpful. So did you learn coding specifically for this, or was it just like life reasons?
Yes. No, so I can kind of go through the recent events. So, yeah, I traded small caps discretionary for like a year and a half.
Mm-hmm.
And that was a great experience as far as just like seeing edges play out in real time. Um, and just like getting screen time, I feel like is really important. But I wanted to be able to, I guess I had this realization this year. So I think it was around summertime, little maybe spring. And I had just gone through, too many boom and busts really as a
Yeah,
discretionary trader. It
yeah.
was just, I was just getting mentally taxed too hard. And I'm sure you know about this, and everybody who trades has gone through this. Um, and I was kind of just thinking about, what my 1 or 2 year plan was, um, as far as, how am I going to move forward trading as I get older, and, I don't have as much time now, as when I first started. Um, I didn't have as much time as, life is going to happen and I'm going to get older, have a family, I needed to make some sort of change. And I knew that I could develop a system because I had this system that's been profitable, running for about a year now.
Mm-hmm.
So I think I knew I just had to bite the bullet and kind of learn to code. Um, so I took a break from trading and I took like 2 or 3 courses, um, and learned some Python. And I did a lot of research as far as backtesting platforms.
Yep.
Most people online are telling you build your own platform, build your own trading platform so you can control everything. But I'm not really interested in that. I'm not a programmer.
Right.
I just want to check my ideas. So um, I decided to learn Quant Connect,
Yeah.
which
Okay.
is, if you've heard of that.
Yeah, we
So
used it
it's
before.
yeah, so it's a backtesting platform. Everything's built out for you. So I just had to learn some Python, and I was able to actually take courses specific for Quant Connect.
Really?
Yeah, so Python for Quant Connect, which is very useful. I think my progress would have been like 2, 3 times as slow if I had to just learn Python in general and then translate that to a platform without like having that specific course.
Mm-hmm.
So I took some of those courses, and then a friend from Discord was telling me about these AI tools that build into your IDE, like Cursor.
Mm-hmm.
Um, so with that, plus with the courses, I was able to really speed up, how quick that I could start backtesting stuff
Okay.
through code. So I think my initial goal, like when I started taking those courses, was maybe next year I would have one strategy, maybe ready to go. But I think those tools kind of sped it up by 5 or 6 months. So I was almost, I think, to get to live, my first strategy to get to live was only 3 or 4 months I started, after I was taking a break from discretionary and, decided to learn how to code.
Okay. That, I mean, that's actually amazing. So like, first of all, you made like a 1 or 2 year plan, which is something, I mean, I don't even see like the successful traders talk about that at all in trading. Um, and I definitely never really made a plan. I think a lot of traders' mentality is just like, I'm going to sit down and power through, or I'm going to kind of like quit. And it's not really like a structured plan of, okay, where do I want to get to in the next 1 or 2 years? I guess that structured plan is always like, well, I want to be profitable. But you sat down and you said, I want to learn coding so I can build me out one strategy. And that was kind of like the 1 2 year plan kind of thing. Okay. And then you actually learned how to code in what a matter of, you said the summertime. So, I mean, what is that, like 6 months now?
Yeah, I think it was like end of spring, so maybe May, June
Yeah. So about six,
that I
seven
started.
months.
And then I think I went live with the first strategy at like end of September or October,
That's a
beginning of
very quick
October.
turnaround.
Yeah. So, I have a few things going where I'm not going in completely cold. I had really specific strategies that I traded discretionary that I knew if I could just systematize them, that I would be able to, bring it back in a different, training it systematically.
Mm-hmm.
So I kind of had that stuff going. I wasn't going in completely, didn't know anything about the market or whatever.
Yeah,
So
but it's not so much about like knowing about the market. It's more so just the fact of not coding to taking a strategy, live in an algo that's trading, or a systematic algo that's trading itself. I mean, it's very impressive. Would you consider yourself, I mean, like, you consider yourself like a talented person, or someone who's like kind of naturally gifted in just different areas, or are you just, like, how do you look at yourself? How do you perceive yourself?
I don't think I'm very talented as far as trading. I think I think if I was talented, I already would have been doing really well
Mm-hmm.
discretionary, and I wouldn't have had to do systematic trading.
Mm-hmm.
I think I think the one thing that I am good at is being able to get a little better each day and do, work towards a big goal by doing it step by step. Um, so I was able to, as far as this, like learning how to code and all these backtesting stuff, I was able to like just focus in on the small steps and just kind of put that together. Um, but I'm not sure if I would say that I'm necessarily talented, because I think most talented traders have, you know, that are discretionary traders, take about 2 to 3 years to kind of make that leap. And I think I wanted to transition to systematic because I knew that I could find the edges and implement them, but it was very hard to execute them myself,
Yeah, that makes sense.
with human decision making. So,
Okay, good. I mean, I seems like, I mean, pretty talented to me just in general with the turnaround of that. I mean, that's an amazing thing right there. It's a huge accomplishment in trading. A quick question here: do you think trading, like being a systematic trader, and I guess like programming is synonymous?
I think you don't have to code, but you better be really good at Excel or something like that. I think you need to be able to analyze data in a large way
Yeah.
because how else are you going to create a system?
Yeah.
Um, and again, I think I don't come from a coding or business or financial stats background. I think some of these AI tools have really accelerated my learning curve and be able to, um, implement these things much, much faster than if I didn't have them.
Yeah. Yeah. So for people who don't know, Quant Connect's actually been around for a very, very long time. And I believe it's open. At least it has an open software version of it. And it's kind of built out by its own community, adding tools and different things like that. My group used it for like maybe a year and a half before we decided to start making our own platform, like you kind of mentioned everyone says to do. And I mean, the only reason why we went about it that way is because we wanted the control. We wanted to understand everything. And we kind of didn't like when our code would break, when things would get updated and changed. So that's kind of how we decided to move away from Quant Connect. But while we was using it, it worked great. But let's talk about some of these tools. Like I've been very interested in the AI kind of route because I don't like the program. While I understand, what program, I have an engineering background, so I understand what, a lot of, I had to use Python in college. I had to use MATLAB in college. I can program math stuff, but maybe some more program development things, I'm not, that's not my forte. So can you just talk about like, you talked about Cursor, right? This has been mentioned multiple times, and I keep seeing people bring it up just online on Twitter while I'm doing my research. How has that helped you? And I guess there's been kind of some negative and positive feedback about it. Can you give me like your rundown for like implementing your systems and how it's helped?
Yeah, I think like any tool, it's only as good as you use it.
Mm-hmm.
If you don't know what you're doing and you just tell it to code a backtest with bad instructions, it's going to code something awful that doesn't work, is full of bugs. I think it's an amazing tool if just like any tool, you have to practice using it. So, when I first started using it, you know, it would write awful code, like I said, but you kind of learn how to focus it using, for instance, this is what I'll do. So if I'm writing a backtest, I'll plan out the entire backtest, basically give it a to-do list. This is what I want to do, X, Y, and Z. Write the to-do list. Don't write any code yet. And then what's even better is if you can give it reference code. So I will give it, code that I've already written that I know is good. And I'll say, base the framework on this existing code. And then I will also give it rules. These are syntax problems that you run into on Quant Connect, specific Quant Connect syntax stuff. So make sure you don't mess that up either. So if I do all of that, I can pretty much write, a back test in an hour or two, which is very fast for me, at least. I think without that, I don't even know if I could write a whole complicated back test without doing that,
Yeah.
with my coding knowledge. Right now, my coding knowledge is perfect for this because I kind of think of it like a language, right?
Yeah.
When you're learning a language, you can kind of understand when somebody's talking to you, but it's really hard to come up with the sentences by yourself and
Mm-hmm.
speak back, fluently. So that's kind of how I feel about the coding. I can look at all the code, understand what's going on, but if I had to come up with it from scratch, um, with only a few courses under my belt, it would be really, really hard.
Yeah.
So that's kind of what has been able to speed up my progress so fast. Just learning how to use the tools correctly, because there's definitely pros and cons.
Yeah. I see a lot of pros with it. I mean, There's also the same. I think the same cons you have with that is the same cons you have if you do it by yourself. You can do it wrong. You can do bad code. I see it all the time. It'll have bugs.
Yeah.
I mean, we have bugs in our code all the time in our group. So, good stuff. Good stuff. I think that's very important. I think almost everyone has mentioned Cursor. I didn't even know it existed before I started like doing this series. So to see so many people talk about it is definitely something I want to check out, especially since I actually have a decent coding background. I just don't like it. I find coding very, it's like brain taxing. Like I only have so much brain power to use a day, and it just like eats it right away. And it's annoying. So that's kind of my experience with it. So,
I mean, you should try it.
yeah, I plan on getting into it. Pretty busy right now. I'm doing some research and I'm just using Spikeet and Excel. You know, I'm like really good in Excel. So for me right now, especially since I do VBA coding, which is for guys who don't know, that's pretty much how you automate stuff in Excel. You can pretty much make your own backtest in Excel if you know how to do VBA coding. And you can also use ChatGPT. That's kind of what I use if I don't know how to do something. You can use ChatGPT, but you do have to bring in like different libraries and stuff like that, like a Python or anything else. So it is kind of annoying still, but yeah. So, you talked about backtesting a lot. What is a backtest to you? Like let's just start there. What is a simple backtest to you?
From start to finish, kind of how I develop it.
Just the basic idea of when someone says, "Oh, I backtested that." What does that mean? Like, what type of conditions will they have to fulfill for that?
I think, and this kind of goes back to studies, right?
Yeah.
So, unbiased data set,
Yep.
you're able to write a scan for that data set to screen for certain things that you're looking for.
Mm-hmm.
And then you take those screened names, and then you're able to write execution for that. So if X does this, then you buy it or you sell it, and then you sell and buy it, to either cover the short or sell the long.
Right.
If these conditions are met.
So
something that can be quantified.
Yep. I was just going to say that, just something that can be quantified and that has, a non-biased data set. I think that's my general definition. I think everyone has a general definition. I'm trying to gain understanding because there's some terminologies in our field that, since the field's not new, but it's not a lot of people really talking about it. It's just, things are different. So, and then do you do like any split test data, or like do you test one data set with another data set, or you just kind of, the data set, it is what it is. I'm not testing on like a reference data set or anything like that. You just kind of go through the data and just say, hey, these are my numbers. This is what I got historically.
I double check my data. I don't have two data sets necessarily.
Mm-hmm.
So what I will do is, and I think this is very important, is once I have the backtest written, I will export the trades, and then I can import the trades into a different program, and I can look at the trades, like how they're executing.
Mm-hmm.
So I can immediately see if there's mistakes or if, my backtest is wrong sometimes too. But that helps me double check the data, and I can, measure the criteria, whatever I'm screening for, in that platform. So in that way, I will double check the data.
Okay.
Yeah.
I guess for the people that's wondering, a split test is just in general, you pretty much, let's say you do a back test and you want to do it from, if I did a back test, it would be like from 2020 to 2025, right? And let's say I wanted to do some type of small cap short. And what I would do is I would take, maybe I would do the test on the first 4 years, so 2020 to 2024, and I would get historical data on that, my results, my win percentage, the win rate, the profit factor, all these different metrics that I would track, right? And then on 2025, I would separate that and do a separate test on that and see if it matches up with the data set from 2020 to 2024.
Oh, I see what you're saying.
That way, if like, hey, is this thing consistent, or, whatever metrics. You can do random samples. There's multiple ways to do it, but it's just like another, I guess, way to independently test like your variables and see if they really stack up and if you're getting the same, or if it's something just has like a breakout year. Like even some people, for example, they'll move out I know a lot of people who do tests and they'll literally move out everything from 2020 because it's just an anomaly of a year. So I guess that's what I was kind of referring to.
Got it. I haven't heard of that term before, but yes, I'll do that in a different way where I will just run a back test for maybe 1 to 2 years and just see, is there something going on here? And then when I'm confident there's something going on, then I'll run like a 6 or 7 year back test after that.
That makes sense.
Just to see if it's consistent.
Yeah, that makes sense. Yeah. So what about like the samples? How many samples do you think you need? I heard a lot of variance in this, but how many samples do you think is for like to give you confidence at least?
I think something I think you need to test at least 5 years. I think 6. I think I usually test from 2018
Okay.
when I want to like do the long back test. I think anything shorter is not going to give you enough samples just to make sure it's robust in multiple markets. I think 2018 gives you a good, you get a little bit of everything. You get 2020 and 2021, which were, crazy years, but you also get 2022 and, 2023 was a little bit flatter. But I think at least for small caps, I think going back too far isn't really that helpful just because the market has changed so much as far as in the small cap world. There's so much more liquidity now in the last, 1 or 2 years. There's so many more gappers and runners. Going back to, I don't know, 10, 20 years, I'm not sure if it's even that relevant anymore.
Yeah, I would agree.
As far as how the market, moves.
Yeah, we talked about that kind of in the last episode, if anyone wants to check that out. So what about like trades, like I guess signals, or I don't know how people want to refer to like trades. Like, is it you need to see 100 trades per year, 1,000 trades per year? Do you have any type of criteria for that?
I don't have specific criteria, but I need to see enough trades where it's not random. There's actual data backing up. I think, I base it a lot on already successful short traders. So I'm not just kind of, making these things up, but,
Right.
Most systematic short traders might only trade, 1 to 2 times a month, as far as like finding that A+ setup. And they're adding some, some of them are adding some discretion. So I think it depends, but I think anything that trades less than 1 or 2 times a month is not enough. I think if something's trading once every 3 months, it's really hard to find consistency.
Yeah.
So as somebody, I think if I was in a different position where, I was already very successful, I wouldn't really have a problem with that low data set. But as somebody who's trying to start out and build systems, and this kind of goes from some lessons that I've learned trading discretionary, I want to trade often and I want to trade as much as possible and I want to see green immediately, just to get that conviction growing of, what I'm doing is working. Because let's say you build a system out and it trades once every 3 months, how are you going to know if it's working?
Yeah.
You might get three, 4 trades a year and they could all fail and you could think it's wrong, but that could just be bad luck, right?
Yeah.
Even high win rate stuff, can fail 4 times in a row.
Yeah. I mean, I was going to say that's my group had a similar problem. We had like pretty much a trend trading strategy, and we didn't realize that the strategy was kind of like it was bugged until like a couple of months later down the line, because only had taken like 5 trades, right? So when you don't get those reps in, it's going to be hard to get the bugs out and figure out whatever issues you have when you take it live, right? So that's like that. Kind of getting those reps in is something I think is definitely just important in general when you're developing the system, at least as you kind of stated. So to go along with the back testing, what metrics have you kind of like, I guess, used to reference if your strategy is doing, the numbers it's supposed to? Like, are you kind of like a average win rate with RR? Or are you kind of like a compounded annual growth rate per year? Like, what metrics are you using to kind of track your systems and see if they're performing well?
Yeah. I had one more thought going back to that consistency. I think really quick, I think, all these really big hedge funds or trading firms, when they get traders to start out, most of the time it's scalping methods
Mm-hmm.
and day trades because they want people to trade as much as possible and see consistency and see green immediately so that they can get reps in. Because if you're learning to trade and you're swing trading and you trade, you're trend following and you trade 2, 3 times or 2, 3 months out of the whole year, how are you going to get consistency and figure out if you are doing correct things, right? It's really hard.
Yeah.
Um, so let's see, metrics that I look at. I would look at win rate for sure. Average win rate and loss, average win and loss. Um, Also, I do look a lot at trade frequency, right? So I'm looking for consistent trades.
Mm.
Um, I'm looking at the probabilistic Sharpe ratio. So that's the probability that it will beat the benchmark. So SPY or whatever.
Mm-hmm.
So you want that to be high, but mostly just win rate and how big are my wins and losses.
Okay.
Um, you just got to make that math work out, right? So trade frequency, and then your max losses can't be outweighing the wins.
Okay.
Um,
So is trade frequency like max exposure? Is that kind of in a similar camp?
no, trade frequency is just consistent trades. So once at least ideally it would trade once a week. I'm
Okay.
looking for stuff like that.
So it's actually
Um,
just like a kind of like a
yeah,
amount per day or per week or some type of time period.
yeah. Um, as far as like as many trades to get in, not necessarily because I'm usually the position sizes aren't big enough where that would be a problem.
Okay. Gotcha.
Yeah.
Makes sense. Makes sense. And then have you said you've been running your EP strategy or your post earnings drift for seems like over a year now, right?
Yeah.
Has it ever been a time you looked at like turning it off or?
I think I could add more rules and as a group we could add more rules and kind of like mess with it more, but at this point I'd rather just develop new strategies. I think my goal with as far as like developing strategies is to have as many strategies running at once as possible.
Mm-hmm.
Um, so I'd rather instead of like messing with that too much as it's kind of performing well, I'd rather just develop a new strategy. I think I could probably make it do better, but um, at a certain point you don't want to overfit and kind of mess with things too much.
Right.
You
If
know,
it's
I
working,
think
go ahead.
yeah. Yeah, I think this is something I've learned and it helped me a lot, coming up with strategies is just try and keep things as simple as possible. If you have 10 plus criterias, it's probably too much. I think if you don't if you don't see an edge in like 4 or 5 criterias immediately, those are kind of like how I came up with the 2 short strategies that I'm trading right now. It was like that, where I had 4 or 5 really simple criterias, and immediately I saw an edge with almost no um, execution rules. Just like really, really basic execution rules. It was already profitable.
By simple execution rules, you're talking about like take the short at open, sell at close, like that type of simple.
Exactly.
Yeah.
Yeah, that type of simple.
Okay. So yeah, I think that's been a common theme amongst everyone, even me. Like, you overcomplicate things with eight eight signals, eight conditions you need to meet for the trade to work, and it's just like, yeah, that strategy is probably not going to execute well on the market.
Exactly. Yeah.
So, real quick, so you talked about forward testing, like the data and stuff. Do you still forward test?
I track every single metric in my back test when I go live. So if I take a trade, I'm tracking all the criteria that was needed to take the trade.
Okay.
And I'm, screenshotting everything. And eventually when I get enough data points, then I can look at those trades and see if it's performed, see how it's performing or see if there's anything I could switch up. So yes, definitely.
Okay.
You got to track everything.
Okay. Gotcha. And then we can move out of the back testing category. You talked a lot about what you do now, right? You were in the group, you kind of developed this profitable purse earning drift strategy. People obviously have their lives, they have the things they're doing, and then you kind of moved on to your own thing, even learned coding, and got things running on your own. So what have you been using? What is the data set? Like, where are you getting your data from? Are you using Dash to automate? Like, how is these systems going outside of just the AI that kind of helped you build it? What are you actually using to source your data and to get things running automated on, whatever platform you're using? The whole nine.
Got it. So I do use Spikeet. So I will, if I have an idea, I will run a scan on Spikeet and kind of just do a preliminary, preliminary analysis of it, of the data. So I think it's very hard to run a back test in the dark. Basically, you have no direction where it's pointing. So I think that's a good way to kind of just get some preliminary data, kind of know, where your focus should be, if that makes sense. So then I'll take those analysis from the Excel, and then I'll write a back test. And then I'll run it. Like, I'll try and run it with the most basic, like I was saying, basic criteria, basic execution, just to kind of see. And then I'll export the trades and kind of look at the charts. And I think this is really important. I don't know if other people do it, but I found it really helpful to not just run backtests and just trust like this is, what it's doing. I think, and maybe this is from, trading discretionary for a while, but really looking at the charts and seeing, what's going on, how are these stocks moving? Is this idea working? How does the idea fail? How does the idea work? When the trade works, for instance, let's say you short something, and you get a short signal. Does the trade work the entire way, or is it chopping around? Is it going back through your stop? All those things are really important to do. So I'll kind of look at those trades, then I'll kind of get the parameters set, and then I'll go through a few iterations of, adjusting parameters and doing analysis on the changes. And then, most of the time, the results will be bad, but,
yeah,
and it won't work. But, a few times I got it right, and then, then I'll go to live.
Exactly. So. That is the process. Most of the times you're wrong, but then
yeah,
you only need. I mean, I only have I don't have that many profitable strategies, but I have enough, right? And that's the goal, is to get enough that you can make some money. So you mentioned in Excel, so you take Spikeet data and you just kind of you put it in Excel and you give it an initial analysis. What does that initial analysis look like? Are you just for example, are you just getting the high a day, the low a day off of Spikeet? Like, what exactly are you getting to kind of get you out of the dark and bring light to the data set that you're using?
Yeah, maybe I'll pull it up and see. Yeah, so I'll look at, opening, high, low, close prices, the volume, average high time, average low time,
Hmm.
um, you know, pre-market stats, intraday ranges, um, market cap, floats, um, kind of whatever I can come up with. The gap, obviously. Um, yeah, that's pretty much it.
Those are some pretty simple metrics. Nothing
Yeah,
too complicated in there.
nothing too complicated.
Nice. I mean, yeah, I think that's what you want, really.
Yeah,
If you can pull a strategy out of those simple metrics, you're probably good to go, right? I think that's the general ideal is when we say don't make it too complex. Like if you have all these different fundamental data, surprise, and
yeah,
all these different things, well, then you might be getting into uh, a land of being overcomplicated, right? So okay, so you do that. You do an initial analysis with Spikeet. You then take the data set. Now, does you use it? Do you use like a different data set to testing your back test? Like, does it pull like from a different API or anything, or is it just
yes. The Quant Connect has its own data set, so
oh,
it will transition to whatever data Quant Connect pulls.
okay? And then, have you seen any real differences in the data sets between Spikeet and I guess Quant Connect?
That's definitely something that I want it to be similar. Obviously, if it's like way off, then I know something's off. But I found it to be similar
Okay,
enough where, yeah.
that's good. That's good. And then, with that, so you pull in Quant Connect, you run the test, then you take it live. Uh, no, I mean, I guess that's the whole process. So how do you get it? How do you get it live from Quant Connect?
So Quant Connect, you can link to your broker, but I'm trading the short strategies. I'm executing them manually
Oh, okay, gotcha.
because you have to locate shares for these stocks. So if I do come up with a long strat, then I can have it be automated. Um, but like I said, the EP long strat is automated though.
Right.
But that's a completely different universe. Most systematic short sellers at least start manually executing,
Yeah.
just because of the locate issue and the special brokers, um, are hard to link up with the APIs and stuff.
Yeah. So I guess in the future, are you looking at automating that? Is that something you want to do after like you run it for so long? You're like, okay, this is profitable. It's probably worth the time and effort.
I think that was kind of my idea for the future, just because I'm gonna, you know, if I ever want to have a family or, settle down, it's gonna be the time that I'm gonna want to spend on the computer is gonna go down less and less.
Yeah.
So my idea was basically to automate more things. And even the short stuff, um, that I have to execute, it doesn't take that much effort to execute them. I'm not checking, crazy, like I said, it's simple stuff. So I'm not checking crazy, criteria to execute them. So yes, down the road for sure, I want to have more stuff automated. But I think at this point, until you get to, you know, 10, 20 strategies, I think that's when you probably want to start automating most things. I think it's pretty doable if, you're only getting, let's say, two, three singles a week from your 4 or 5 systems. It's pretty easy to just trade that yourself.
Okay. 10, 20 strategies. That is to me, that's a big number. You said that pretty confidently and calmly. Does that mean 10 to 20 strategies is kind of something, you're in the works for and you feel strongly you can pull off?
I think this would be like a really long-term goal, but I know there are traders that I've studied, um, that do easily 10 to 20 strategies, but most of them are automated, and most of them, a fair number of them, will only trade in really specific circumstances. For instance, like one strategy might just be for when the VIX spikes, so that might trade once a year. So that counts as a strategy, but it's not that intensive.
Right.
I think if you're just trading small caps, you're not going to have 10 to 20 strategies. You're going to have 3 to 4 strategies, just different entry stuff,
Yeah.
But, down the line, hopefully, this is when you start scaling your account up and stuff like that. You need to transition to other stuff.
Right.
So.
Yeah, I think that's generally how it goes, right? Especially if you have 10 and 20 profitable strategies, you should probably be making a lot of money. And then you start scaling up your account naturally, getting further and further out from small caps. Or I don't know, actually, there's a ton of people who make a ton of money that's specifically just in small caps. It seems to be, like you said, there's a lot more liquidity in it now. So who knows when that's going to die? Hopefully never. But I'm sure there'll always be a playing field for at least people that have a small enough account. Maybe the big guys will, they won't be able to do it because of slippage and stuff like that. Speaking of that, you've been trading these by hand. Have you experienced the slippage?
I mean, I'm pretty familiar with slippage because I've been trading them, on the discretionary side for a pretty long time. So what I will do is, in the strategies that I have, is kind of like put padding into the back test. So I'll, honestly, I think locates are worse than slippage, the locate fees. So I'll add in like, how does the strategy perform with an extra, 1R loss, 1% loss, hypothetically. That kind of will help account for slippage and locates. I think on most of these small caps, if they're in play, you can expect at least half an hour. I think half an hour would be happy for a locate.
Wow.
Yeah, I mean, just the other day there was one that was 4 hours for locates. So that one I didn't take, obviously, because that would really impact the strategy. But I think it's important, when you're trading small caps to add that padding into the back test, so you know that it can still be robust, even if you're losing an extra 1 hour per trade.
Yeah. Okay, that's very interesting. So you're using like a R system, which is, I mean, I'm familiar with it. I kind of use the same thing to go off individual trade metric. A lot of people I've talked to have the profit factor on these is very small. Like, for example, we're talking like 0.75, which will just mean your average win. The winnings, the average win versus the average loss. I mean, that's all your profit factor is. So it's just a ratio between it, right? So you just mentioned a 4R trade. A 4R trade, I don't know what the profit factor would look like for that, but a 4R trade is a lot, in my opinion. That's like a longs you win a lot of money on, or longs you get a better ratio usually, while shorts you don't get the same type of ratio, but you get more. The win rate's a lot higher. A 4R win for a small cap strategy seems, or for a short strategy in general, seems like a decent amount. Can you just talk about? Go ahead.
Sorry, let me clarify. When I said 4R, I meant the other day I ran into a 4R locate. So the locate would have cost 4Rs.
Yeah, which is terrible.
Yeah, which is awful. So you can't take that because that's going to be huge, loss. But yeah, I do agree though. Yeah. So most wins, at least the strategies that I'm looking for are going to be on the short side, are going to be, very, very high win rate, small wins, and then, occasionally you hit a max loss, right?
Mm-hmm.
So, yeah.
Okay. And then with that, since you're in the middle of your journey, what is like right now, like how much of your account are you risking? Like what's kind of going through your head in your risk management system? Tell me about the battles. I mean, obviously, if you found something not extremely profitable, but if you found something profitable, right? And you're sitting there, you're thinking to yourself, well, if I scale this up, I put more risk on, I can make more money fast. Has that psychology hit you yet? Is it something you struggle with? Like, how does that work in your brain?
Yeah, I mean, I think that's something you always struggle with, right? Is sizing. I think one of the number one problems with traders is oversizing, and that's something that I do all the time, but or that I, have struggled with all the time. But I think as the back tests get more, robust and specific, I'm pretty careful with just trying to stick to the sizing because um, a lot of the times on the short side, sometimes sizing is kind of the actual risk parameter, right? Um, because you never know what can happen.
Mm-hmm.
And if you size too big, it's going to skew the whole strategy because, your max loss is going to be way too big at that point. And then let's say you take double the amount of size that you back tested for, all of a sudden your drawdown is twice as big. And let's say you get into an unlucky streak, right? You have a 70% win rate, but you lose four, five, six times in a row somehow. All of a sudden, you almost have blown up your account maybe. So it's really, really important to not scale up too hard, at least not size up more than what you tested for. If you have tested for having larger size, then you can do that, right? Because you looked at the drawdowns and the probabilities of
Mm-hmm.
your equity curve.
Right. So for you, when you talk about this, like you personally in your system, right? Um, you're taking these shorts. What is the risk of your percent account? I mean, obviously it's going to be based on your strategy, but you're trading something similar to most people. Like you said, you're not reinventing the wheel. So we can assume like a similar type of stats, right? Maybe like 70% win rate, somewhere around that, profit factor, like 0.78 or something like that. So with this kind of strategy that's going on, right? Would you say what's like the max risk you're willing to take? Like you're feeling good, like it's a good day, you're feeling good. You think this trade's going to work and everything. You've been trading well. What's like the max risk you're like, I can't risk over this percent of my account on like the shorts?
It depends on which strategy. I think I have two strategies right now, and they both have different risk parameters.
Mm-hmm.
So on one of them, I'm risking maybe 2% of my account on the trade. And the other one, it's probably 3 to 4%
Okay.
of account on each trade. But I'm not getting into 3 or 4 of those trades a day.
Right.
Like I think the probability of that happening is like, I haven't looked at it, but it must be really small. Um,
So during the live
so yeah.
testing, it really just hasn't happened yet.
Yeah, I think, well, it all balances out. So I think last month I had maybe three signals in one day, and I took them all. But then, I think in November I've had barely any signals. So it just balances out, and you kind of just have to take all the signals that you get.
Yeah.
Right.
Yeah. That makes sense. So it sounds like, I mean, to me, it sounds like you're doing, well, that's probably something I'll need to look into, but it sounds like you're doing something not as frequent as maybe other people. Like I see a lot of traders that's taking shorts. They're shorting something damn near every day. So it sounds like you found something, we can say a bit different or more specific and more focused in than just the general, I'm gapping something that, has a small float or has a, I don't know, big float. I don't know, large
Yeah.
float. And
Yeah,
it's
believe me, I looked at all that stuff and maybe it's just me. I couldn't come up with something was consistent that would trade every day. I think
you want that, but you didn't find it.
I think that's really hard. I think what I've discovered is instead of coming up with one system that trades every day, I need 4 to 5 systems that trade once a week, and then I'll get something that trade. Then I'll be able to trade every day.
Yeah.
That's kind of my goal.
Okay. Makes
Yeah.
sense. Makes sense.
Yeah.
I think it's also good that you found something that's probably a little bit different from everyone else, maybe less signals. You'll probably avoid a lot of I guess, the blow ups and just kind of, I mean, you're less exposed to the market. So on the bad days, you can probably avoid a lot of situations that everyone else is taking and a lot of the competition that everyone else is taking because you found something, slightly different. Okay. Well, sounds good, man. Sounds good. So, middle of the journey, you talked about your plan for the next year already. I guess that's what I was going to ask, but you kind of already talked about it. Can you just iterate how you're going to try to get to that? You talked about 10 to 20 strategies, right? You talked about the next 2 years. You wanted one strategy live on the market. Seems like you have 3 already, which is very impressive. So have you reorganized your goal moving forward? Like, what is the goal moving forward now?
Yeah, I have reorganized the goal because my timeline really moved up by 6 months or so.
Mm-hmm.
So right now I have 2 small cap strategies that are live. So if I can get one more before next year, that'll be 3. So that's kind of my goal, this month. And then I think if I can add maybe 1 or 2 more, um, within the first quarter or 2 of the year, which I think is possible, um, then I think I'll be at a good amount of small cap strategies. And when I say strategies, it's kind of all similar movers. It's just different signals, right? For
Mm-hmm.
different variations. So it's kind of like 4 or 5 variations of the same trade, kind of, you know.
Different entries.
Yeah,
Yeah.
because you have to test every single entry.
Okay.
So, there's different characteristics of how stocks fade. So you kind of come up with an entry for every single situation. I mean, if you want to lay them out, there's front side shorts, and then there's, backside shorts. So that's already 2 different things. So you need 2 different strategies for each of those. Um, so yeah, if I could get 4 to 5 small cap strategies total, I think that would leave me in a really good spot where I could be taking um, almost a trade every day, depending on the market, obviously. There's going to be dry spells. So if I can get to that spot, then I can move on to automating more, long strats for higher market caps, and then, adding more strats like that where I don't have to execute. Or they could be short strategies, but, don't have to, um, use locates necessarily.
Yeah. Yeah. Okay. And then that means they're planning in the future to, I guess, move to like Cobra and DAS to kind of handle those locates. I mean, that's what most people are doing. I'm sure you're aware. Is there any type of plan like that?
There's no plan right now because it's really not that time consuming to just execute the strategies. I think if I get to a point where I feel like I'm overwhelmed keeping track of signals and trade ideas that are happening,
Yep.
then I will move to automating. But once I get to that point, there's no reason to.
Yeah. Okay. Makes sense. Makes sense. Some of us are lazy. Don't want to ever open up the computer screen. Yeah. Just real quick. We're wrapping this up. Tell me about like the discretionary experience, like the studies for that. We came from a similar camp. Like, there's probably going to be some people who watch this and they're going to be like, they might be interested in like the hybrid approach. You talked about charts a lot. I personally use charts to, like you said, quantify like your trade, make sure it's a verification that what you're actually trading, the strategy, it looks how you expect it to look, right? You need to see that. Even if you're doing a back test, you can't just look at numbers. I want to see the trade's actually doing what I think it's going to do. So tell me about that. Where did you get this methodology from? Was that from like doing that discretionary studying, or was that just something you just learned from sitting in front of a computer actually trying to take your trades live?
I think it's both. I think I think working through how to do discretionary studies and looking at charts, having people tell me I need to study charts, I think that has kind of carried over a little bit.
Yeah.
Um, so definitely there's that aspect of it. But I think it's just important to, especially when I'm manually executing things, to just double check your work and just make sure everything is, how it seems.
Yeah.
It's the charts are reinforcing your idea. It's not, you can see the patterns happening and it's not random.
Right. Yeah.
Yeah.
I feel like for me, that's always been the kind of like my discretionary studies kicking in, like maybe I do have metrics to prove it, but there's a chart in front of me and I know what my trade should generally look like. So if I get something drastically different, my situational awareness that I have developed during those discretionary studies should tell me, hey, something's off here. Maybe you should reconsider and sell this, or maybe, that's when you start adding, I guess, that discretionary, which, like you said, is maybe not the best thing to do. That's kind of how I am. I can't get rid of that, the element of my bias from the discretionary days. So, which is why I also want to automate. I want to step away from it and not have to look, because sometimes I feel like that's in general would help me out more. But it seems like, from what you talked about, you're like the opposite. You want to move further and further away from, I guess, that approach. So do you do any type of, when you're when you're at the computer, obviously taking a short, you're inside the trade, or even like the long for your EP, do you look at something and be like, no, it's time to sell? Like, or like, how are you doing that? You taking partials? You doing full sales? Like, how's your discretion? Does it ever interfere with what you're doing?
I think ideally I wouldn't touch anything right now. Um, I did a little bit of that when I first went live, um, but it was due to there being the backtest not being robust enough. I knew that there was a little bit of a flaw in it when I took it live, or it just wasn't, it could have been better. Um, so I kind of redid the backtest, made it more robust, and now I won't touch it. Um, but yes, there's always that urge, you're up a lot and you want to take some off, but you kind of have to just trust the stats,
Mm-hmm.
that you shouldn't be touching it. And many times, the stock will come back up to your entry. Um, so you really don't want to touch it too much. I think it is really powerful if you can add discretion to something later on. For instance, on some of these shorts, like knowing when to size up more or adding to a position, in the right circumstance will probably increase your profits, by 2 or 3 times. But I think that takes a little bit more experience than what I have right now. I just need to, as I'm taking stuff live, so early on, I just want to make sure the data reflected from the live trades is going to be the same, line up with the back test.
Okay. Nice. Understandable. So this year, how would you say your performance has been so far?
Um, I would say since starting this the new systems, it's been going well. I mean, small caps have been kind of quiet for the past month.
Mm-hmm.
But the month before that, when I was taking a bunch of trades, I think that system was probably up around 15% of the month, or 10-15%. So that was a good start. Um, and then the EP algo has been, it's a little bit more boring. It's not going to create a crazy amount of returns.
Okay.
It's more of like it's just going to kind of beat the benchmark, you know, but it's not
That's
going to do anything
strong.
crazy.
That's pretty
Yeah.
strong. I mean, a lot of people would be satisfied. I mean, you beat the benchmark for, I don't know, 20 plus years. You're gonna grow your account
Yeah,
significantly.
exactly.
So, I mean, that's a good it's a good backup plan. I would say
Yeah,
that.
for
I
sure.
mean, for some people, that is just a plan in general. You can beat the market and work. You can retire early, right? So, okay, cool. So on closing statements here, I like to ask, especially while you're in the middle of your journey, right, and you're going at it, what has been the most valuable thing for you? It can be a characteristic, it can be a resource. Like, I mean, in general, you can say like my most valuable thing is time. It can be a person, it can be a Discord. What has been the most valuable thing along your journey so far?
Let's see. I think the most valuable thing is just being consistent in showing up and improving a little bit every day. Um, I think it's very hard to get overwhelmed, especially when you start out trying to backtest stuff. There's so many tools and so many resources, and it's very open-ended.
Mm-hmm.
So I think just being able to get to the desk and just kind of focus on one small thing for the day and just try and accomplish that, um, it's kind of the only way that I found that I can be consistent, over a long period of time of, working towards something.
Yeah.
Um, yeah.
I think consistency is very key in this. Showing up every day like it's a job it is a job. I mean, it's harder than a job.
Yeah.
So you have to put in hours during the market and after the market and before the market. And then what is something that you think is, I guess, what has been like the biggest pitfall so far?
In trading or systematic specific?
We can just go with let's go with systematic. Yeah.
I think the biggest pitfall was probably overcomplicating things, like we had talked about. I think, and like I was saying before, there's just so much possibility backtesting something, so many different criterias that you can have. Um, I think it's very easy to, write a strategy with 20 criterias and then expect it to work. I think when I found the strategies that I have, it was because I cut back everything and I just tried to be as simple as possible.
Mm-hmm.
So, and also something that I can understand personally. I think there's a lot of like black box, analysis stuff that spits out correlations and, correlation scores and
Yeah.
stuff like that. I tried a little bit of that stuff. It was not helpful at all.
Yeah.
I think for a retail trader that's trying to be systematic, like you have to understand all your signals and how they work. So something very simple, unless you come from some sort of, you know, crazy background where you can understand all the stats, or you're doing like, you know, arbitrage or something like that.
Yeah. Yeah. So in general, you feel like not understanding some of the things you were doing was kind of like a big pitfall for you.
Yeah, I mean, I went down, a few week rabbit hole where I was, trying to come up with these correlation stats that were, it just it wasn't good.
Yeah.
Didn't get anywhere there.
Yeah.
So once I simplified everything, that's when I kind of, found what I wanted to find.
So interesting. Definitely, I'm gonna
Yeah.
take that to my next studies because yeah, simplifying things can be a big help. That's something I think I can do more. I have so many metrics, and like you said, it's endless possibilities. Even though when I make my strategies, I'm usually just like 3 to 4 kind of metrics, like maybe 1 to 2 big ones that gets me more towards that profitability, and then maybe some small tweaks that puts it over. I haven't found anything like crazy profitable or anything like that so far, but yeah, that's kind of like the approach. But I think you've seen my sales spreadsheet before. It's insane. So, but yeah, so, okay, cool. Well, good talking to you, man. I appreciate the time. Definitely, like I said, we want to get some more people to talk about the middle road journey where I got some stuff going. I'm not there yet, but I'm building it up. Like you said, you have that plan to get to that 10, that 20, profitable strategies systematically. And I really like the approach that you described today. Just kind of planning it out for the year. Seems you're a little ahead, and who knows if this series is going on in 2 to 3 years. Maybe we'll talk again. You can give me the final speech about how you became, rich and very successful from doing this and kind of sticking to your strategy, going step by step. That seems to be your general process, consistency, step by step, and building stuff out. So I really like the approach, and I wish you the best of luck in the future.
Thank you. Thanks for having me.
Yeah, no problem. Any last words you want to say to anyone that's kind of in a similar position to you or just getting started?
Yeah, just don't get overwhelmed. There's just so many resources out there. Kind of just really figure out what you want to do and then try and implement that on a small scale. Just even platform wise, I think I was completely overwhelmed, trying to figure out what platform I was using, what APIs I was using, just try and, really hone in on one specific thing if you're just starting out.
Yeah. Yeah. Cool. I agree. Use Spikeet.
Exactly.
All right. Well, that's going to do it for this episode. This is episode 4. As always, leave comments on who you will want to see next if we can bring someone on the show. Do you have any recommendations, someone you might like to see?
Steven Dux or Chris Verma or Yepes. Those are the big ones. Yeah,
I'm sure we've tried to get in contact with them. So
those ones might be difficult.
Yeah, maybe we'll get them
but
on.
Even somebody like Niv, I realized that I have read his blog already before he was on the podcast. So he's a great resource.
So, all right. Peace out, you guys. Take it easy. And I'll catch you on the next one.